We've all heard the headline. The rich are getting richer, the poor are getting poorer, and the middle class is getting wiped out. This is a trend that's been going on pretty much forever now. And my goal in this video is to show you, number one, why it's happening. That way, number two, you can understand how you can end up on the right side of the story. If we take a look at the last 5 years, between 2019 to 2024, what we saw is that the household income in America rose by around 20%. Over that same time period, the reported inflation numbers, meaning the cost of living, went up by around 23%, which means the average person's income didn't keep up with the price growth of things, not to mention that the stock market investment values have gone up by around 80%, and more specifically, I'm taking a look at the S&P 500. And this is where many people talk about the wealth gap, where wealthy people who are investors got this windfall. Asset values grew faster than inflation, and they grew many times faster than incomes, while incomes didn't even keep up with the price growth of our cost of living. But the reality is this is not a new trend or phenomena. Let's take a look at what has happened over the 5 decades before we saw the big run-up in inflation after the pandemic. Between 1971 to 2021, so before the big pandemic inflation, what we saw is the household income in America grew by around 700%, which sounds nice, but you have to compare that to the price growth of things. Now, the definition of inflation, CPI, has changed quite a bit over the last 5 decades, so let's just take a look at a few items. Over the 5 decades, 1971 to 2021, the average new car grew in price by around 840%. Over the same time period, the median house in America grew by around 1,200%. Over the same time period, attending 1 year of university at a public college grew by around 2,000%. While over those same years, the stock market, more specifically the S&P 500, grew by around 4,000%. Are you starting to see a trend here? But there's one more kicker to this. The household income between 1971 to 2021 also changed, because in 1971, household income was dependent on generally one-income households. Generally, in the early 1970s, the man went to work and the woman didn't. That's how it was in the early 1970s. In 2020 and 2021, it was a two-person household. So despite the fact that now we have two-person income households, the growth of household income didn't keep up with the price growth of many things, not to mention it didn't keep up with the price growth of asset values. So wealthy people who are investors got this big windfall. They saw their asset values grow while incomes did not even keep up with the price growth of things. This is why wealthy people are becoming wealthier, and people who are not wealthy, poor people who just rely on their salaries, keep becoming poorer, and they have no idea of why it's even happening. Now, my goal with these videos are not to make friends. My goals are to get you to be better with money, and I'm going to be brutally honest with you. It's not going to get easier. It's only going to get more difficult, because we're going to continue seeing crazy things happen, and the people that are financially educated and the people that understand this are going to become wealthier, and the people that don't are going to become poorer. I mean, we know that there's a lot of crazy things or interesting things that are going to affect our economy in 2025. For example, we have a new president that's going to be entering the White House. We always keep hearing new worries about a potential recession, and now people are finally starting to get concerned about our national debt levels. Now, this is where you have to understand how to win. And the way you win is you have to become an investor. I mean, you can invest in stocks, you can invest in real estate, you can invest in startup businesses. I mean, you just got to start investing your money. But you have to know the right strategy for you, because the mistake that so many people make is then they say, I'm going to go out and become an investor to try to find the next hot stock. They buy high and they sell low, and then they think the stock market or investing is rigged. But that's not the name of the game. You have to know the right strategy. If you just want to put your money into the markets and just see how you can win over the long term, follow a strategy like investing your money into something like the S&P 500, which is a group of the 500 largest companies in the stock market. And I just ABB, always be buying every week, every 2 weeks, every month. You just keep buying no matter what and let the markets do their thing. But if you want to be a little bit more involved and you want to find more unique investment opportunities that comes with more risk, but also more potential return. And this is one of the reasons why on January 7th, 2025, I'm hosting a free live and virtual wealth building workshop where I'm going to be going over number 1, how you can build an investment strategy in this changing economy in 2025. Number 2, how do you find unique investment opportunities in 2025 when we have all these changes happening? And number 3, how do you actually research those opportunities? How do you do that work and how do you actually analyze your investments? It's a completely free workshop, but you do have to register and save your seat because we have a limited number of people that can join me live. I'm hosting 2 workshops on January 7th, one in the morning at 10:30 a.m. Eastern Standard Time and then one in the evening at 8 p.m. Eastern Standard Time. So if you'd like to join, all you have to do is click the link down in the description below. Now, if we have to try to pinpoint a culprit or what's causing this change, the one big thing that we're seeing is inflation. Now, there's a lot of different reasons for all of this happening. But if we had to try to pinpoint it to just one thing, the one thing that is contributing to incomes rising but not rising fast enough with the cost of living, while also not keeping up with the growth in asset values, has to do with inflation. And many people did not become hip to the concept of inflation until after the pandemic, but inflation is not a new concept. And I want you to understand why it's happening, that way you can understand how you can win from inflation. Now, if you've been subscribed to my channel, you know that I'm a little bit of a weirdo and I like studying financial history because it helps us understand what's going on today. And there are 2 years that really changed our money forever. You want to guess what they are? The first one is 1913. And the reason why 1913 is so significant is because this is when the Federal Reserve Bank was created, and it was also when the federal income tax was enacted into law, but that's kind of separate from today. But the Federal Reserve Bank was created in 1913. They are now our central bank in the United States. The interesting thing about the Federal Reserve Bank is they're not federal. It says so on their website. They're not a reserve because they're not sitting on any cash reserves, and they're not a bank. You and I can't go there to deposit money. However, they have the ability to set interest rates, monitor our monetary policy, meaning our money plan in the United States, and they also have the ability to essentially print money. But this is what's interesting. Back then, in 1913, if the Federal Reserve Bank wanted to print more money and lend it to the United States government, they had a limit to how much they could print because they needed more collateral. Like if you want to go out and get a mortgage, your bank's going to want to see your income, they want to see your collateral, what type of assets that you have, and then they would lend you based off of that. Your bank is going to want to see your income, and then they're going to lend based off of the value of the house, which is the collateral to your loan. And that's kind of how things worked back in 1913, because the Federal Reserve Bank would work to print money, but then we had the collateral, which was the United States government, and our money was backed by a physical asset. It was backed by physical gold. So if you wanted more money, more paper dollars, we needed more physical gold in the United States. But that then changed in 1971 because then President Richard Nixon took the dollar off of the gold standard because the United States government was on the verge of default. We had a lot of debts and we didn't have the ability to pay it, and we didn't have enough gold. And so instead of defaulting, what President Richard Nixon said was, let's temporarily take the dollar off of the gold standard so the Federal Reserve Bank can print essentially infinite amounts of money. And now we can pay all of our bills because now we just created this money out of thin air. Our bills are no longer a problem, and now we have more dollars. But the concern and the risk with this is, of course, inflation. And that was why we saw the super high inflation numbers in the late 1970s and the early 1980s. And all the money printing was why we saw such high inflation in the 1970s and early 1980s. It was because of all that money printing. So now, what is inflation? And there's a couple things that I want you to understand. Technically, inflation comes from the word inflate. What are we inflating when we have inflation? We're inflating the monetary supply. We're inflating how many dollars are out there. But now, if we look at this more practically, for what this means for you, inflation practically means that incomes will go up, but not as fast as the cost of living. And we can take a look at history to demonstrate that, because if we take a look at what has happened over the last more than 5 decades, we have seen the household incomes have gone up as a result of this inflation. But this household income going up has not kept up with the prices of things. And this is not a new phenomenon. I mean, we talk about what's happened over the last 5 years, but it's been happening for more than the last 5 decades. Now let me tie this entire video together. The rich are getting richer, the poor are getting poorer. Why are the rich getting richer? Well, because people are investing their money, and we know that investment values generally go up over the long term. We know market crashes happen. We know markets don't go up every single year, but we know over the long term, asset values go up. Real estate values go up, stock values go up over the long term. But if we have inflation and incomes aren't keeping up with the prices of things, that means it becomes harder and harder for the average person to have extra money to save, let alone invest. And this is where it becomes even more difficult for somebody to start building their wealth. Not impossible, but more difficult. And like I said a few minutes ago, I'm not here to make friends. I'm here to help you be better with money. It's not going to get easier, but the best time to start is now. And so if you want to put a plan into action, let me wipe this off and show you some things that you can do right now. Here's a 3-step plan that you can follow. Number 1, if you have not already, I want you to go out and save $2,000 to protect you against an emergency. A lot of Americans, almost half of Americans, do not have $1,000 saved up to protect them against an emergency. And this is really the bare bones just to get started. Because the reality is life happens. Sometimes people get sick, sometimes cars break, sometimes something goes wrong with your house and you need cash. And the last thing you want to do is when that emergency happens, you have to put it on your credit card. So I want you to save this $2,000 as fast as possible, put it in a separate bank account, and do not touch it unless it's an emergency. And no, Amazon having a sale is not an emergency. After you do that, I want you to pay off your credit card debts and other high interest debts, because this is what is skinning you alive financially. When you have credit card debt, and you're paying your credit card company 15 to 25 to 28% a year in interest, you're making them rich, you're paying for their private jets, you're paying for their big buildings, and you will never be able to build wealth. This is what I call the financial danger zone. And if you have not done these 2 things yet, you are in what I call the financial danger zone, which means right now you're gonna have to make some serious, significant changes. That means no eating out of restaurants, no going on vacations, and no more Netflix until you do these 2 things. And why am I saying no Netflix? It's not to save you the $15 a month. It's because you got to save that 2 hours of TV a day. The average American is watching 2 to 3 hours of television a day, 2 to 3 hours of Netflix, Hulu, and whatever else is out there a day. If you have credit card debt or if you don't have $2,000 saved up, you should not feel comfortable sitting on the sofa watching TV. What you need to be doing is turning that free time into learning time. Use that time to learn how to make some money, to learn how you can earn some money, to learn how you can save some money, to learn how you can invest some money, learn how you can build a business, or actually go out and do something, or work some extra hours at your job. You have to get out of this as fast as possible, because this is holding you back from building any sort of wealth, and it is not going to get easier. I don't care who is in the White House. You got to take care of yourself. I'll give you an example. If you could get the same rate of return as your credit card company, we'll say that they're charging 25% a year in interest, which is about the average credit card interest rate right now. And you could invest just $100 a month. And you did this for 40 years. Do you know how much money your little $100 investment would be worth after 40 years? It wouldn't be worth $100,000. It wouldn't be worth $500,000. It wouldn't be worth $1 million. It wouldn't be worth $5 million. It wouldn't be worth $10 million. It wouldn't be worth $20 million. It wouldn't be worth $30 million. It wouldn't be worth $40 million. It would be worth around $43 million. This is the money that you're never going to see, because you're the person that's making the credit card company rich when you're paying that type of interest. This is why I call it a financial danger zone, and this is why you got to get serious about getting out of here. Once you do this, now we can talk about how do you actually build your wealth. And this is where you can follow something like 75, 15, 10. This is what I talk about a lot, which is for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you put aside to invest. 10 cents is the minimum that you put aside to save for an emergency. Now what you're doing is you are spending your money the way wealthy people do. Wealthy people make money, they invest money, and they spend whatever's left. The average person who is broke makes money, they spend money, and then they save and invest if there's any money left. Now we're going to flip it. You're going to invest and save your money before you spend all of your money. And this is where I want you to create multiple bank accounts. Most banks will allow you to do this for free. If your bank is going to charge you money to do this, find a new bank. What you're going to do is when you get paid, you want money to automatically go out of this account, into this bank account, and into this bank account. So have 3 different bank accounts. And the reason why you want different bank accounts is so you don't accidentally spend your investment money, so you don't accidentally spend your savings money. It's kind of like a tax on yourself, because when you pay your taxes, you don't see that money. And that's why the government does that, because they know if you saw that money, you'd probably be pretty upset at how much money you're paying in taxes. But now you're taxing yourself to make yourself rich. This is what's going to make you rich. It's not this. You spending money on your BMW or on your Rolex, that's not going to make you rich. It might make you look rich, but that's making Rolex rich, it's making BMW rich. It's not making you rich. If you want to be rich, you have to invest your money. And the problem with that is you can't show off your investments the way you can a Rolex. You can't show off your investments the way you can a BMW. But if you really want to be able to build wealth, you have to stop spending all of your money. And I get it. You're going to say, Jaspreet, this is hard. How do you expect me to do that? I'm already struggling with me spending all of my money. Okay, I get that. But if the government imposed a new tax on you, what would you do? You're going to kick, scream, complain, cry, and find a way to pay it. Because if you don't, you're going to end up in jail. I want you to do the same thing here. Find a way. Maybe you got to cut back. Maybe you got to downgrade your car. Maybe you got to live in a smaller apartment. Maybe you got to stop having so much nice stuff. It sucks for a little while. But if you put in that sacrifice today, you'll be able to live the rest of your life without having to worry about money. That's my goal for you. My goal isn't to live small for the rest of your life. I want you to have all the nice and exotic and nice stuff. I want you to have the extravagant luxury things. I want you to be able to afford them. Now, if you're trying to figure out more resources and how you can be a smarter investor, I have a couple of resources that can help you. Number one, of course, is my workshop that I talked about a little bit earlier in this video, which you can register for down in the description. Number two is I have a free newsletter called Market Briefs, where every day my team is breaking down what's happening in the financial markets. That way you can be a smarter investor. If you have not joined Market Briefs yet, again, that's free. I have that link for you down in the description as well. But this is where now you just got to start. And there are many different ways to start investing. You can start by reading books. You can watch some free YouTube videos. I have a ton of videos on my channel, but you just got to get started. Understand that you're going to make mistakes. Understand that you're going to lose money at some point. Understand that investing is risky, but it's also a process. And as you do that, you'll become smarter and you'll find ways to be better at it. And then as you start to grow your wealth, you'll be able to win in this economic system as well. Market just took a nosedive because the Federal Reserve Bank just admitted that inflation is apparently still a problem, and you should ignore everything that Trump says and expect less interest rate cuts in 2025 because apparently inflation is still a problem. This is what Jerome Powell, who was the chairman at the Federal Reserve Bank, said.